Join me as the tax attorney as I answer more questions about the tax strike. I have done quite a lot of videos on this, and some of them have gotten a lot of views, and I'm still working. Okay, so people are asking me, I've already answered the question, should you go exempt? And I said no, because that's technically committing a felony if you're not legally exempt from paying taxes. So I don't think you should commit perjury. I do not recommend. However, I've also seen this comment section of like, well, why can't I just increase my exemptions on my W-4, not go exempt, but increase it to the point where I'm getting a majority. I'm not really having federal taxes withheld. And then I hold my own money in a high yield savings account, and then I pay them at the end of the year. Well, actually the next year, right? Because you file and pay in April. And so the reason you can do that, but you will be charged a penalty, right? So there's an underpayment penalty because we have a pay-as-you-go system. And if you are a W-2 employee, that means withheld correctly throughout the year. And if you are self-employed or have flow-through income, that means you're making quarterly estimated payments. Now, here's what I have to say about all of that. As somebody who is a tax attorney that has an S Corp, a C Corp, and multiple W-2s for this year, and my husband has a W-2, I have withholdings from my W-2. I always do, right? And it's easy for me to do that, and I always do that. However, when it comes to making estimated tax payments for my business or my flow-through income, I do not make quarterly estimated payments, even though I'm operating at a profit. And the reason is I get my P&L and my balance sheet throughout the year, right? And I get it every single month. And so I know what my profit is. I don't take distributions out of my S corporation unless I need them, but most of the time I didn't really need them. So I would leave them in the S corporation. But if I did take money out of my S corporation, I would set aside at least 35 to 40% for federal and state income taxes and put it in a savings account. Then in Q4 of the current tax year, I would do my own tax planning because I'm a tax attorney. I mean, I have a CPA, but I'd be like, okay, what do I need to do? I have all this money. If I do not spend this money legally within the tax law to reduce my tax liability, I will owe X amount of dollars, which I currently have access to. So I would take that as an opportunity to do tax planning. What am I doing? I'm paying bonuses to employees. I'm maxing out retirement accounts. I'm matching out HSA accounts. I am prepaying 12 months of expenses for anything in my business that I know I'm absolutely going to have that builds back up my business. Annual contracts, insurance, software contracts. Because if you do annual contracts, you can often negotiate better rates. You can go ahead, as long as it's within 12 months, you can prepay all those expenses. So I had all this money and I would just do things that I knew I would definitely was going to have to pay, and that would build up my business and reduce my tax liability. I still do that. And then even before December 31st, I know exactly what I'm going to owe. And then I would just make my Q4 estimated payment by January 15th. And so I'm having taxes withheld throughout the year. I'm not making estimated payments. I still owe estimated payments, but I only make the Q4 payment. But I think the issue with the majority of Americans doing this is they don't have flow-through income, and they should be paying as they go. And I think I paid $124,000 of federal income taxes last year, just federal income taxes. Yay. Okay. I'm also angry. I think the penalty for only paying Q4 was like $119. So it's worth it to me to be in financial control. I also have to say, you have to be in financial discipline. What I see is people not exercising financial discipline and control and really actively doing tax planning. So they're not doing that. They're just kind of willy-nilly doing it. They have the money and then they spend the money, then they lose the money, and then they don't pay by April 15th. And then they get a bunch of penalties and interest, which I'm just not into doing. If you're getting huge refunds, you're not doing it right. You should not be giving the government an interest-free loan. Okay? So I would agree with that. Also, if you're thinking about doing some kind of complex tax planning, like you're a W-2 only, and you want to do the short-term rental loophole, I could see a way in which you maybe change your exemptions on your W-4 to have more money kind coming to you, and then maybe you use that money to make a down payment on a short-term rental because you're going to do a cost study, and then that is going to offset your W-2 income and you're not going to have a liability. I could see reducing it that way, because you can change your W-4 to be very exact based on your deductions, your credits, your tax planning, your withholding throughout the year, and it'd be fine, right? I actually mess around with my withholdings throughout the year. I check them every quarter. I recommend that taxpayers check them at the beginning of every year. If you get bonuses or commissions, or you have a change in filing status, you get married, you get divorced, you have more children, you get a new job, you have commissions, again, you're going to do some aggressive tax planning or preemptive tax planning. Fine, change your withholdings. I don't love, like I said, I don't recommend going exempt. If you're going to change your withholdings and put it in a savings account, know that there's an underpayment penalty, and don't spend the money because you're going to have to pay. I hope that helps.